Sup, bro? So I was thinking about MSTY and NAV erosion and all of that good stuff and my average cost. And so, like, my average cost keeps going down, but not as much as I wanted to because I keep diluting, I keep adding shares. Okay, I understand that. But then, like, I was getting a little bit annoyed with the NAV erosion, especially when I looked at this chart. I noticed like a little pattern. It flies up like a rocket ship, and then there is a long decline. Then it flies up again. Then there is a long decline. And we had a small fly up, and now it's in small decline. And I don't know what will happen. So it gave me like not so happy thoughts. But then, bro, I was thinking about it, and it just dwelled on me. Bro, MSTY pays my mortgage. And even if I like keep adding a few shares, not reinvesting the whole dividend, but just like adding a few shares here and there, this thing is going to continue to pay my mortgage. And so, bro, I created a calculator, basically like a dividend cash flow calculator. I'll show it to you in a second. And the idea was, how much MSTY do you need to pay your mortgage or your car payment or whatever? So I built that tool. But before we begin, bro, smash the like button, subscribe to the channel. It really helps. And also, I will show the YieldMax tracker. We just launched it a few days ago. And just for my YouTube subscribers, bro, I don't share this anywhere else. But for the people on YouTube, at the end of this video, I'll post a 25% lifetime discount to this tool and to the whole website for all the earnings reports and all of that good stuff. 25% lifetime, bro. And even if we raise the price in the future, your price will not change and you'll keep that discount. Okay, so that will be at the end of the video somewhere, and it will be a big thing right over here with the discount code. All right, so let's go back here. Yeah, one more thing, bro. So this is not financial advice, and the things I'll be showing you, they're merely projections. There is no guarantees. I don't give financial advice. I'm not a financial advisor, so this is just for fun and entertainment, as Rod says. So one thing I want to show you. It says over here that dividend CAGR is minus 59%, and while that is kind of true, it basically compares this last dividend, $1.47, to this first dividend over like 14, 15, 16, 17 months, whatever. So yeah, this is not exactly true. So the dividend is pretty stable. It's kind of not so high over here, the last payment, but it's easily explained if we look at the share count. So right before the dividend was made, this is YieldMax tracker. So our shares outstanding, when I was making my dividend prediction of $1.75, we had 192 million shares in the fund, and right before the declaration, we went up almost 15% on the share count. So it's completely insane, and that diluted the dividend amount. So it would be, in my opinion, around $1.75 if they didn't anticipate such a huge increase in shares. Okay, and this is the current cycle. I'll talk about that a little bit later at the end, but basically right now we're sitting at 1 cent sort of net income. We have a P&L of minus 88 cents, but we have a 98 cents synthetic P&L gain, but that's unrealized. And what happened, they actually rolled the 420 position into 370 and 380s and maybe 390s. Anyway, that's not what the video is about. So here is a calculator. Quick jump to mortgage calculator here. So my mortgage payment is just about $3,000. Now my rate is 3.5%, bro. But what happens is I have a very high tax and a pretty expensive insurance. I gotta shop for insurance, but I can't do anything about the tax. Let me show you. So, bro, basically, I'm paying like 10,000 a year in taxes and like 2,000 in insurance, and that's basically $1,000 a month that I pay on top of my mortgage payment. Okay, and so even with the 3.5%, it still comes out to about $3,000 a month. Okay, and so here is a mortgage calculator, and for a hypothetical 500,000 home, but not everybody has such high taxes, and so I estimated about 4,800 in tax per year and like 1,500 in insurance, and so that still comes to about $3,100, and that's with a almost 7% interest rate. So that's not too bad, but it includes the lower taxes. So anyway, let's say you want to pay your mortgage with MSTY. How many shares do you need, bro? Okay, so I created this calculator. It's basically based on the retirement calculator that we have on the site. And anyway, so if we load MSTY here, these are the basic numbers. So last dividend and your CAGR. So this is very important. How will the stock behave in the future, and how will the dividends behave in the future? So this is where it makes sense to kind of look over here again. So you can see it's like jumping up, but average kind of ticking down a little bit. And the share price, while it's stable relative to like where it launched, you know, the first day of trading, they launched at 20 bucks and closed at 21 something. We're basically dead even, dead flat. But I don't like to make optimistic assumptions. So let's say we go minus 12% per year on both price and dividend. Now we cannot use minus 58% on dividend. That's crazy talk. It will basically evaporate in 2 years. And let's say, to be conservative, it pays $1 per month on average. Okay, so here we have basically our cash flow goal. Okay, so it could be your mortgage payment, your car payment, but how much you want to have. And in my case, it's $3,000 for a mortgage. Okay, then I added this cash buffer. It's in case of dividend cuts, but also whatever your pocket money. You can set this to 0, but we'll keep it at 15%, and that's going to be $450, which is 15% of 3 grand. And also, we don't want our MSTY position to evaporate and use all the money for the cash flow. We want to grow our position a little bit, and so I allocate 15% or another $450 to dripping. Okay, and so we have a tax rate. And by the way, you can also like increase this. Let's say you do it on a margin, and we'll do this a little bit later. So, but let's say your tax rate is 20%. All right, and we're going to project this out to 10 years. The rest of it is from database. So the current price, and then we set the dividend and the CAGRs. So let's calculate. And basically, this calculator says that we need to invest $116,000 right now to have $58,500 per year, okay, in cash flow. That will cover our mortgage, okay. It will cover the 15% buffer, so that's $450. It will also cover the $450 that goes into dripping, into growing our position. All right, and I don't know why this says portfolio value is 0. Okay, I gotta shift this. It's whatever. Your portfolio value at the end is not 0, bro. Okay, and so here is a breakdown again. $3,000 per month goes toward the mortgage payment, and that's total 36 grand per year. Buffer, that's your like cash money, the pocket money, 5,400, and then for dripping we'll allocate another 5,400, and taxes on that amount is $11,700 per year, and that's at 20%. So if you're like in a 25% bracket, you can recalculate, and you need about $10,000 more, but your taxes will be significantly higher. So let's keep it at 20. All right, and now let's look at the results. I'm going to zoom in because there's a lot of stuff here, bro. So okay, so this is the balance, your portfolio value at the beginning of the year, number of your shares, and that's your dividend. And again, we said that dividend will go down by about 12% per year, and so will the price. Okay, we keep it even. And also, I went conservative on the dividend, because if we increase this dividend to even $1.25, our initial investment will go down significantly. Okay, so let's keep it at $1. It's conservative, bro. And so yeah, here is a table. Now, it's not 100% accurate. There's few variances, and I'll explain them to you in a second. But basically, here's some debug that I added for now. This basically shows you the total tax. This is how much money you need to pay for the mortgage, the pocket money, and yeah, this does not include the dripping. And this is also debug. This is parts, basically combine the drip and taxes and how much you take out or withdraw per year. Okay, so we're not going. I did the debug just to confirm that everything is working more or less correctly. And there might be a variance, couple of percent, but basically, while your dividend is going down, based on the rule that we set, minus 12% per year, your share count is increasing significantly. You can see new shares over here. In the first year, just with the drip of like 15%, you add 732 shares, and then the next year you add 825, 927, and this shows you the end shares for the year. And here is the total dividend that you have collected. All right, bro. And so what's cool about it, your dividend collected quickly, very quickly, in year 3 is higher than the money you put in. And this is with partial dripping of the dividends. So you keep growing your portfolio, you keep supporting it on, like keep it on on life support. And so for a little bit it goes up, but then it starts going down a little bit. And at year 10, so the goal of this calculator is to maintain minimum withdrawal, okay, $58,500, and to reinvest everything else. Okay, that's how it works. Whatever you have on top of this withdrawal, and this includes taxes, okay, on that withdrawal, but actually our tax here, our actual tax is higher because the whole dividend amount gets taxed. All right, so the goal is to not drop our yearly dividend below this threshold, $58,500. So, bro, basically, to pay for your mortgage, to have a little bit of pocket money or whatever buffer for safety, and to also continue growing your account or keeping it on life support so it doesn't go down to zero because of NAV erosion and subsequent drop in dividends, you basically would need about 116 grand invested right now into MSTY to do that. But again, I'm a little bit conservative, so let's do some scenarios. Let's say we don't need the buffer. Okay, let's say we don't want to take extra cash out. We just want to pay for the mortgage and continue dripping. All right, and let's say that we do it on a margin. And so if you borrow about 100 grand on Robinhood, the current margin rate is about 5%. So we'll call it 25% tax, and that includes the margin in it because it's an expense that comes out of your dividends. Whether you pay taxes on it or not depends on if you itemize or if you do a standard deduction. But you know that tax on the margin interest is not that big. So I think within margin of error we can just like play with the numbers. And so to achieve that, so we're not taking any cash out, we're just paying the mortgage. We need 110 grand invested. But again, if you borrow that on the margin, and bro, I'm not telling you to borrow money on the margin because margin itself is risky. You can end up with a margin call. But also, if this thing collapses, you will be in a world of hurt. So people who play with margin, they should definitely understand the risk. And so again, this is not a financial advice, bro. Just kind of demonstrating that you don't even have to cough up this money. Don't take me on that. Don't do that blindly. I'm not saying don't use margin. Margin can be very useful when used safely. But a lot of people, you know, they think they're invincible and they get margin called and then they have to sell at losses, and like it's just not pretty. So be extremely careful. Don't follow my advice. This is just demonstrating the what's possible. But basically, in this scenario, we borrow $110,000 from Robinhood, so we don't even put this money down. We just borrow it from Robinhood, okay? And we pay them the margin interest with the money from that we get in dividends. But let's say if you pay interest only, you actually end up still owing the balance. So let's call it a 30%, even 35% tax. Let's say you pay 5% margin, but you also repay 10% of the balance back. Okay, so you would have to borrow $132,000. But again, this also gives sort of pays down your balance on the margin, so that will slowly decrease. And of course, this calculator doesn't account for that. It only calculates how much money you need to invest to cover your target expenses. So $3,000 mortgage and 15% drip allocation. And basically, you can add some cash money over here if you want. I think it's, yeah, you can play with it like in any in different scenarios, and we can estimate if this thing goes down 15% per year. Okay, so in that case we need $150,000, but again, this includes the margin. And if we go just like 25% tax, no margin, no repayment, it's $121,000. So basically, bro, the way I see it, like, so again, my like small chunk of MSTY that I've been so worried about NAV erosion and all of that good stuff, and with my dumb luck, I always buy at the top for some reason. Bro, my MSTY is paying my mortgage, and I don't have to worry about that. And it's actually paying a little bit more. So if I don't reinvest or if I don't add shares, it actually pays down the balance that I originally invested. And so this is freaking amazing, bro. just the thought of it, you know, that the mortgage. So over here, if you go here, the mortgage is $500,000. Okay, and then you put 100 grand down, and so you owe $400,000. But then, like again, just theory, not something you should follow into. But if you do margin, you borrow the money from from Robinhood or something like that, and you pay it down. There's an allowance to for margin interest, and if you want to pay it down, you just pay down a little bit more, so we can include here 20% to pay down the margin balance, and that's like $600 per month. So anyway, you can do different scenarios, but I think it's completely cool that you can invest a small amount, much smaller amount than your house is worth, and pay it off and not worry about the house. At least that works out for me. And if, let's say you have a car payment and your car payment is, say, $700, you know, and you don't want any cash out, and you don't even want to worry about margin, so let's keep it at 20% for 10 years. Boom. Why is this? Let's go 0. Okay, let's say you have a car payment $700 and you want to keep your thing on life support. So you have an option: finance the car and pay the interest. Okay, or, and a lot of people do it, you can like see it on Reddit, bro. People just, why not I invest into MSTY instead of investing in a car, and then I borrow the car and the MSTY will pay the interest, and I actually need to borrow less than the cost of the car, because the $700 car payment is like a $45,000 car. I think I have to check on that. I actually, one time I almost took out a loan, but my goal was to pay it off very fast, and they're like, there's a prepayment penalty and you have to make the payments for at least 2 years. I'm like, that's crazy talk. So I didn't. I just went to the bank and took a home equity line of credit. Anyway, bro, so that's on this cash flow calculator, dividend cash flow calculator. I think it's super cool, just like not having to worry about a mortgage payment, and you know, you can always increase your allocations and even grow your account. And by the way, your account doesn't go to 0 at the end. Like, yeah, it drops a little bit from the beginning. Actually, look at this. Look at this. It's basically the same as it was in the beginning. Wow, this is cool. Like, it goes up a little bit in the middle, but then it basically at the 10-year mark, it comes back to the same as it was in the beginning. And that's because we also do DRIP. Okay, and if this goes down by 0%, which we don't know if it will or will not. Like, we cannot project MSTY out to 10 years because there are people who are worried it's not going to last another year. So I think 10 years projection on MSTY is kind of crazy talk. But why is it not calculating? No? Maybe it doesn't like 0. Okay, yeah, it doesn't like 0. I gotta fix it. So we just did, it goes up by 1% per year. And look at that. Wow. So you end up even growing the account. So back over here, bro, even though like the dividend is kind of like in the gutter, in the dumps right now, look at this return. 281% since inception, and that's like 16 months. Crazy, completely insane. By the way, bro, I wanted to show you another thing right here. So we have this 6-way compare tool. So it's really 5-way, and the 6th one is SPY, like a benchmark. And I already preloaded. Look at this: MSTY beat Bitcoin by 170% in total return since the inception of MSTY, because it came out a couple months after IBIT, which is a Bitcoin ETF. So wow, it outperformed it like crazy. And we also have here, very interesting. Let's close the MSTY and IBIT and do SPY and YMax. Bro, check this out. So YMax is performing on par with the market, even beating it a little bit, but you have to account for taxes. I know people on Reddit hate the word taxes, but you gotta pay them taxes, bro. So like, if you include the tax, then it is not so good compared to SPY. But this is what I realized about YMax. It's actually not that bad. So look at this. Let's see the dividend prediction. So this is for the cycle. Tomorrow we have 9 hours left. By the time you watch this video, could be already announced. But I can tell you with a 99% certainty that they'll pay about 18.5 cents tomorrow. That's what they will announce. And how do I know that? Because that's exactly what they earned. And how do I know that? We have this table here. Our predictions, the actual dividend, and the variance. How much our prediction differs from the actual dividend. And you can see here, we're a little bit short on the estimate, and here we're a little bit too aggressive, but we're within 1% on average. So I can tell you with 99% certainty that's how much it will pay. And what's even cooler, so back when they went with weekly payments, right before that they were paying about 60 to 65 cents. All right, but now the average payment, let's say it's like 17 cents, right? But that's 13 times per year. So let's do this. So 60.65 times 12. That's $7.80. And then we do, say, 0.17 times 52. That's $8.80. So we're already getting a higher dividend and a higher yield. But what's even more cooler, the price of MSTY or YMAX back then was like 17 bucks, 18 bucks. You know, it was jumping around, but it was much higher. Therefore, our current yield is much higher because the price right now is lower. So that's insane, bro. I mean, that back then the yield was sometimes in the 50% range, and that's great. But 70% yield is much better, if you ask me. Stay cool, bro. I gotta redo this. So yeah, because it was like calculating yield based on this monthly payments, and then they go weekly. So I have to redo this logic. I'll come back to that. But yeah, but back then the yield was about about 55%, give or take. So it's yielding much better. It's kind of conservative. And what happened, bro, is they now have a lot more underlying stocks, and so it's much more stable. Now, of course, now currently the market is going up, and so we're getting higher dividends. Let's close this boy. So here we got 30 cents. Wow, I don't even remember that. That was kind of high. But on average, we're kind of keeping the pace with dividends right over here in the beginning. Like there were some really bad days over here, then there were some really good days, but now it's kind of stabilized at around 17 cents, 17, 18 cents. And I think if the market is more or less, not violent, we're going to continue getting this nice dividend yield on YMAX. And so I'm even thinking about, like, when we have a significant, short-term drop, and we always get them, bro. It's just a matter of time. Maybe, increase my position on YMAX. I'm liking it. I'm getting to like it more, even though it didn't perform as great as, say, other things. 70% is a very nice yield. Let's close this. Okay, so we don't have any trades because they don't do trades. They just, when the money comes in, they allocate to all these funds. But because there's so many funds, there's more like diversification, and the dividend is more stable that way. And again, we can make predictions about YMAX with very high certainty, whereas YMAG is completely uncertain. And so basically what I wanted to do is load YMAX here, how much money you need to pay your mortgage with YMAX. So we load it. Let's go. And yeah, so mine dividend CAGR. So again, we cannot use this dividend CAGR. Let's say it's minus 5%. The price has been really stable, so let's call it minus, say, like 7%. And this will do minus 6. So they're almost the same. I think the dividend kind of outpaces the price. At least that's been the case. And we keep 17 cents. That's fair. All right. So you need 90 grand. Wow. Bro. You need less money with YMAX to pay a mortgage than you need with MSTY. And that's because our assumptions on MSTY were a lot more pessimistic. So yeah, YMAX is relatively more stable, not as profitable. But again, like we used very pessimistic assumptions on MSTY, and I think we have to kind of, because like it's much more risky than YMAX, which is very diversified. So, bro, to pay a mortgage and have some pocket money and continue growing, you just need $90,000. Wow, that's very cool. Okay, bro, thanks for watching. Just okay, I'm gonna put the 25% discount for YieldMax Tracker, and it is available for all the current subscribers. So even those who subscribed before we released it, it's available. So and you can get 25% lifetime discount. There is a big discount code right over here. And while you're looking at the discount code, I'm just gonna quickly once again go into this where we stand with MSTY so far. So we're about 3 weeks away from the next declaration, and that gives us time. But so far they didn't have very good results. Like today they lost $4.5 million, and that's because what the hell happened over here? This is a buy call. They bought a $400 call. I don't know why. What the hell, bro? Why would they do that? So it closed at 391. Why did they lose $2 million buying a $400 call that expires in 3 days? I have no idea, bro. Here's another like $3 million they lost on the same. Yo, bro, I just don't get it. What's going on? So, oh, okay. this is completely insane, bro. Check this out. They bought this back for 1.6 million, and then they sold it for a $10 higher strike for half the price. Same here. They buy it back, and they booked a $4.5 million loss on this trade. This is complete. Why would you do that? Let's look. So for the whole cycle, they lost $200 million. Let's keep going back. So here they buy back the 405, buy to close, and they sell for 20. Here they sell the 390 for 2 weeks from now. And they collect 12. Bro, I don't get it. So here, here they buy it right back, but they buy it. Oh no, I'm sorry. Yeah, this is a synthetic position, bro. This is a synthetic, so they're basically net on it. That's not bad. That means more money coming in. So here's another synthetic position, basically 18,000 shares in synthetics. Maybe they were rolling them. Yeah. But overall, they lost $200 million for the cycle, so that's not good. But I think because now their synthetic is in the green, and where we're standing on our. Oh, this is horrible. Look at this. This is what I didn't. This is why I was so pissed. Now there's a sell put. Buy call sell put. Why is this not registered as a synthetic? I'll have to check the code. But this is another synthetic position. And okay, so this is good. This is good. And here are the short calls that they sell. So this is what I hated last week, bro. When MicroStrategy dropped and they sold all this like 380, 385, 390 calls. Yeah. Okay, well, at least this guy they sold at 420. But yeah, we're basically playing with fire on these positions, and these two are already in the red. This is basically just around break even. So what we want is MicroStrategy to go down to about 385 by the end of the week. But yeah, this cycle is not looking too good, bro. Anyway, all right. This is a very long video by now, so enough talking. Bro, by the way, so I want to do a live stream. So if you got this far, let's discuss live stream in the comments. I want to know if people want to join, when is the best time. I think I'm just gonna do like a test one. I've never done one, so I need to set up software and all of that good stuff. But if you want to do a live stream, you can ask me questions, you know, we can discuss. I want to ask you questions, so shoot some ideas around. Let's do that. Just let me know in the comment section below. Again, smash the like button. The discount code is just rewind a few seconds back, and thanks for watching. I'll see you in the next video. Again, 25% lifetime discount for anybody, for all our YouTube members, YouTube subscribers, and even not subscribers. But I would love you to join the channel. And that's a 7-day trial. If you don't like it, you can cancel. With that said, bro, thanks for watching. This cash flow calculator will be released soon, and I will see you in the next video. Peace.